Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points.
In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first we will be covering the technical aspect of this market. Then I will be moving to the order flow by looking at the commitment of traders, so the COT data. So essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that we have a market which has just created a quite strong historical monthly support and demand area. In fact, from here, all these previous rejections to the upside have been created. Every single time that the market tested its zone, it got rejected to the upside quite aggressively. And we can notice how just a few months ago, we had yet another test of the exact same zone. The market started rejecting the area to the upside, and it has also broken above a quite recent structure level, which the market has created, which if we zoom in into the most recent price action is quite easy to identify, which is this area here. In fact, this zone was acting as previous monthly resistance, preceding all these rejections to the downside. And now that the market has broken it to the upside, is obviously turned support. And as it is turned support, if the market goes and retests a level after it broke it to the upside, is supposed to respect it as the newly found support after it was turned from resistance to a demand and support area. Now, from a pattern standpoint, we have a clear impulse to the upside followed by a correction. So after the impulse, if we want to measure this correction phase, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have a 0.618 and 0.786 Fibonacci retracements lining up exactly at this area, which is also the previous resistance turn support that we have just identified. Now, this creates confluence of support at the area because we have both the horizontal structure and the Fibonacci levels lining up in the same area of structure, and this creates a confluence of support. And instead of a confluence of support area, there is an increased probability of seeing institutional longing, which is something that we will be looking at in just a few minutes when we move to the commitment of traders analysis. For now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly standpoint, we can see that we just had the creation of this big M pattern. Now, when you have an M pattern, there is an increased probability, in my experience, to see a potential rejection to the upside. We can see, for example, how we had a clear M pattern here. After the market created such pattern, we then had the rejection to the upside. So it's not every time, for example, here we can see another one. After that, the market completed the neckline. So it's not every time, but in my experience, there is an increased probability when there is such pattern to see a rejection to the upside. So this combined with the fact that all this area is a confluence of support increases the probabilities that if the market will drop lower, we could see some institutional longing, which could push this price higher. Now, dropping down on the daily time frame, what do we see? Now, from a daily standpoint, what we can notice is that the market has been creating a floor of support at this zone. We can notice already twice the market rejected the area to the upside. Right now, it is approaching a third test of the zone. Now, a lot of people will be longing at this area because they see the support here. Now, if the market will push through this, most likely a lot of stop losses will be below this low. This means that it could be a perfect setup for some stop loss hunting for the market to go and take out all the stop losses before then creating a rejection to the upside. And this would also create a deeper test of the monthly and weekly support areas that we have previously identified at this area, and also then the completion of the weekly M pattern that I have already identified. Now, why do I think that there is the possibility, in my opinion, to see a push lower? Because if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the GBP, the first thing we have to keep in mind is that if we're looking at the data for the GBP, we're actually already looking at GBPUSD, because all currencies on the spot are traded against the USD. And what we can see is that with the last report, we have seen a decrease of the net positions from 93K down to 45K, and we have not seen yet net positions starting to increase again, which suggests that at least at the moment, institutions are not longing GBPUSD yet, even though we are in that confluence of support. So in my opinion, there is definitely a possibility for a drop lower to really test the support around this area, take out all the stop losses, and then to see a potential rejection to the upside away from that support. So if the market will go for a push lower, at that point, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing that weekly M pattern at the neckline, which is also the previous weekly support turn resistance. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.